This is Business Incorporated with me, Bosun Omofaye. We welcome our viewers here and around the world to a new business year 2019. Coming up over the next 30 minutes, Moody's Investor Services issues new report on sub-Saharan banking institutions. And Nigerians have been asked to brace up for higher consumer prices in the new year, while the country's Egina floating oil facility is due to kick off on the 3rd of January. We thank you for joining us on the program. Let's get started. The banking industry in sub-Saharan Africa is expected to remain stable this year, despite some identified downside risks in the financial markets. A note published on Monday by Moody's Investor Services indicates stricter regulations implementation for financial stability through Basel II and Basel III in the new year. The agency sees high asset risk and renewed foreign currency liquidity pressures, partly offset by strong earnings and high local currency liquidity. Meantime, Nigerian banks were rated B2 with stable outlook. Egyptian, Morocco, and Mauritius banks are ranked as most resilient. Moody's indicates a slight pickup in gross domestic products growth, supported by stable commodity prices, robust domestic demand, and policy adjustment for countries within the sub-Saharan Africa. Meantime, sub-Saharan Africa's economic recovery will progress slowly into next year, even as analysts sound alarms over the rate at which some countries are taking on increasing debt. There was also public outcry in several countries as the governments hunt for additional revenue to meet development goals. This is a report.
For this great continent.
The process of integration.
The leaders of 44 African countries made history in March this year when they gathered in Rwanda's capital, Kigali, and endorsed the African Continental Free Trade Agreement, AfCFTA, a $3 trillion continental free trade zone that encompasses 1.2 billion people. Economists point to Africa's low level of intra-regional trade, which sits at just 15% of the total commerce, as one of the reasons for the continent's enduring poverty and lack of a strong manufacturing base.
If the African Continental Free Trade Area is to work, it's important that we see more manufacturing and agro-processing and processing generally in the continent. Otherwise, there's very little production to trade, with our neighboring countries.
Nigeria and South Africa, the two economies that normally push the continent into faster growth, are struggling to reclaim their potential, even though commodity prices have improved. Lower oil production in Nigeria offset higher oil prices, and in South Africa, weak household consumption growth was compounded by a contraction in agriculture. And although capital inflows to Africa have grown exponentially in recent years, but risks also exist. Because much of the increase has come from debt. The IMF reported this year that liability inflows ballooned from $3 billion in 2000 to $60 billion in 2017.
What we're concerned about is really the pace of increase rather than the level of debt on average. But what is worrisome is that in countries, particularly oil exporters, other natural commodity exporters, what we've seen is a pronounced increase in debt in the last couple of years. And there, of course, it reflects the big hit to their economies following the commodity price crash, the hit to revenue levels, the hit to their economies.
In addition to taking on unprecedented levels of debt, some African governments like Kenya, Zimbabwe and Somalia also hiked taxes in a bid, they all said, to fund a range of development goals. But food and fuel prices spiked and there was outcry from the proverbial man on the streets, business commodities and civil societies. Analysts and charities urged governments to increase revenue instead by cracking down on graft and by taxing the richest more.
So taxing people more before you address these leakages, which are through corruption, mismanagement, will not help because they are still going to collect all the money. And then there'll be another headline. 3 months down the line, billions have disappeared.
Sudan has also had to watch its fortunes disappear. The country's economy has been struggling since the South ceded in 2011, taking with it 3/4 of previous oil output. The crisis deepened this year as the black market for US dollars effectively replaced the formal banking system after the Sudanese pound was devalued, making it difficult to import essential supplies.
The living condition in Sudan is getting worse. We have queues everywhere for fuel and at ATMs. You can't even pull your money out of the bank. You can't get your salary. Everything has become very expensive and we don't know what is happening. It feels like there's a ticking bomb and we don't know when it will explode.
While the Sudanese government fights to prevent economic collapse and civil disorder at the close of the year, the IMF predicts that most other African countries will fare better and could grow by about 3.8% in 2019.
Joining us now for a look back into 2018 equities, currency and commodities, plus a short of look ahead. 2019 is Ali Khan Sasho, who is the CEO at Rich Management. Ali is joining us from Nairobi, Kenya, via Skype this afternoon. Good afternoon to you, Ali. It's good to see you once again. Welcome to a brand new year.
It's good to see you too, and I appreciate the conversation tonight all year as well.
Yeah, thank you so much, Ali. We've got to start the new year together, looking at the emerging and frontier markets around the world, in particular SSA, Sub-Saharan Africa. Give us your broad view. Oh, just a few of these equities markets seem to be in the green as we wrap up the year. South Africa and I think Tunisia, Nigeria finished not really nice, 18% in negative territory.
So I think, the first point to make is it was a very tough time for emerging markets. I think emerging market equities lost about $5 trillion of value last year. And essentially what's been happening is that golden flood of liquidity that we've seen for nearly 10 years has started to recede and recede quite fast, in particular via the US, which has been reducing the balance sheet and dialing up interest rates. And in that kind of environment, it's very tough for emerging and frontier markets. And looking at Africa, I think, I can't recall, I think Malawi produced a positive return. But other than that, Nigeria was down, I think, 17%, South Africa around 12%, here in Nairobi around 24%. When you put in the currency depreciation, the losses were even bigger. So I described it in an article I wrote as an annus horribilis, and I think a lot of us are hoping that we might see an annus miraculous this year.